Hey guys, welcome to the Flow Zone. As you know, my name is Renko, and today we're going to talk about liquidity levels. What are they and how can we find them? And how can we use liquidity levels to make better trading decisions? So without further ado, let's dive into the charts. So let's first understand liquidity zones. Liquidity zones are areas on a price chart where there's a lot of buying or selling activity likely to happen. These zones represent price levels where there is a high concentration of orders, making them key interests for traders. So here's how it works. First, we have an accumulation of orders. So traders often place a large number of buy and sell orders at certain price levels. This could be due to previous market behavior, technical indicators, or even psychological price points like round numbers 5300, 5500, stuff like that. These areas become liquidity zones because that's where the market has a lot of liquidity, meaning there is enough volume to absorb large trades without causing significant price movements. So like now we have established a range. Price will then go and take out the liquidity below, meaning there's a lot of buy orders here, passive ones, and there's also a lot of stop orders from buyers right here, which are market sell orders, which will also trigger passive buy orders. So we have a breakout right here, liquidity gets absorbed, and we rush through, making our way to a certain top where these buyers will start selling this and price will eventually go back down. So this is a range and an initiation, and price will mitigate back down below into this previous range where now we have established liquidity zones where price will often trigger a reaction. When price approaches a liquidity zone, it will either pause, reverse, or break through with significant momentum. This happens because large orders get filled, leading either to a strong defense of that zone or a breakthrough. Now, understanding where these liquidity zones are can give you a significant edge. If you know that a certain level has a lot of buy orders defending that zone, you can start understanding that price will struggle to get lower and find new buyers beyond that level. Conversely, if you know there's a lot of sell orders at a zone, sellers will try to keep price below that zone. So in essence, liquidity zones are like magnets. They can attract price action and can dictate where the market will move to next. By identifying and understanding these zones, you can make more informed trading decisions and potentially improve your profitability. Now let's look on the charts and how we can find them. So I'd like to start on a 4-hour chart. Let's not go into market structure too deep. We have separate videos for that. But let us just zoom out a little and let's just check market reactions. We had a range here, escape. We came back into this range right here, and then price moved further above. So where price comes back, we're going to draw these little boxes. And as you can see, I am looking for places where we have aggressive behavior of price. That is all. This is a 4-hour chart. I'm just mapping out the bigger kind of story right here. I am not trading a 4-hour chart. What I am doing is just finding spots where there is a lot of aggression from one side or the other. So let's do that going up. Here, as you can see, as we reach the top, sellers came down really fast. We're gonna mark out this one. We're even gonna mark out this one where price returned into. Okay. Then we have this thing called gaps. Let's give that another color because we do want to identify gaps. Because a gap is a place where price moved so fast through it that there is no orders And also, those are very significant price points. Now that we marked out the most significant level zones on a 4-hour chart, we will go in and mark them out on a 60-minute chart. What are we looking for here? Is the August the 10th today, so we are gonna look like maybe 14 days back, right into this gap. So now we're just gonna adjust these levels a little bit, making them a little bit smaller and more precise. As you can see, when coming up, we had 1, 2, 3, 4 touches before going down right underneath here. So this liquidity zone, I'm just gonna shovel it here. So we know price has gone really fast at this point at 5450 on ES. And let us make this one a little bit smaller as well. What I'm doing now is I'm just pinpointing more exact locations of where liquidity can be. We have another gap right here. So we will mark that out as a gap. Also, as you can definitely see, when price returned back into this gap, the last 4 days, we had an enormous reaction to that. So this is in big lines where our liquidity is hiding right now. As you can also see, this is in great confluence with what some people would call support and resistance zones. So zones where price has difficulty getting lower or getting higher because of the orders that are stacking up right in there. Now we zoom in to a 15-minute chart. The 15-minute chart, I also put my volume profiles up. So we have a volume profile every day, daily volume profile. And we have this yellow one that is a composite volume profile, which will change when I zoom in or out because it displays the exact volume of what is on my screen. Now, because we reached this this high right here, I will start from this day, which is August 1st, which initiated this drop we had last week. So now we are going to look where we have high volume nodes and where we have low volume nodes. A high volume node is a zone where price has been more active, so where there's more buying and selling orders. A low volume node can be seen as a zone of no interest, where we can expect price to either shoot through or either new orders will be formed there, cleaning up the volume profile, because a volume profile wants to be nice and evenly distributed on a chart. Low volume nodes like this will eventually just fill up because the market needs price to be evenly distributed overall. As you can see, we came back on a 50-minute chart. You can see this very clearly. We have a POC right here with a low volume node right here. So this is an area that we can definitely mark out for sure. Low volume node, low volume node. So we come back, then we have this day, which is August the 2nd, where it just has a massive sell-off with a gap afterwards going into August 4. This is just one big low volume node. So this is one day we have to keep in mind. You see, we built some volume at the low. So what I'm going to do is I'm going to put this box in correlation with this low volume node on that day. Then we had the gap. We sold off. As you can clearly see right here, underneath this, we had a low volume area and price did return right here. So we're going to put this box a little lower because this is a significant low that we want to keep in mind for the following days. So we're going to zoom in a little bit on this 15-minute chart. So as you can see, now we are building an A to B price range, which is A to B. This is our price range right here, where we are building now 1, 2, 3, 4, 5 days in a row. We see that price has a lot of difficulty going above this gap. We tapped it a little bit here at 5360.50, but went back in. So we can now start looking for liquidity right here in this zone. And we can see that this volume zone here is respected the next day, but we also left a low volume node right here, which I will just go into mark out. And that is also the lows of this zone. And you can clearly see that it corresponds with the place where our buyers came in right here. And we have a retest right here. Let's look for some other zones. Here we can see this big green zone aggression with these single prints. So we're also going to mark out this zone. But because there's almost no activity on this volume profile, if you're into market profile, this is what we call single prints, but I don't use market profile on my charts, but I will mark them out as being singles. Because we know that when price is returning here, there will be a strong reaction right inside this neighborhood below this value area. Now what you can do also is you can keep in mind that we have a value area right here. Underneath this single print zone, we retested this value area. We looked above, we retested it again. We looked above, retested it, looked below. Got a test at this liquidity zone, made a little range, and then we fired through. So what I am going to do is keep this range in mind. And especially, so I will mark this zone out as being a strong zone. Because I will believe that when price comes back, we either will get a reaction at this gap, making price go up again, or either get lower, get back into this range. So we will mark it out as a distribution on the short term. And that is marked out. So I know now that these are significant zones, and on the upside we have our significant zones as well. So now we're just gonna narrow it down a little bit more. This guy is a very special chart to me. It is my 2-hour footprint chart. It is a 2-hour delta footprint chart where I marked out nothing more than everything above 100 delta. And I use this to zoom in. So as we are going a little bit more into the past, so you can see this is this one top that we previously discussed on the gap. We have to zoom this in a lot. You can see there's a lot of sell orders coming in right there at this gap. So we know sellers are trying to push the price down. We have even more and even more sellers pushing down right into this zone. So we can narrow this zone down a little bit and just get this sell cluster right here. We have another buy cluster right here. We have retested this zone with also a little buys. So we have made a higher volume node that we will definitely keep in mind. But what we are actually watching is these last 3 days of this range. So where are our buys? Where are our sells? So we have this gap, as we mentioned before. building up a lot of buying activity right here. As you can see, we are building up a lot of buying activity on the right, going into this liquidity zone. We're building up even more as a follow-up. Going into that zone, let's zoom a little bit further. At the top, we get some nice absorption right here into this gap. I'm not the best drawing artist in the world. So we know that there's a lot of buyers being absorbed, and they are answered by sellers at this level. So we might expect to get a little bit lower prices, but as we see, there's no sellers coming in at this level. So we might also get a retest and a breakout right there into the zone. Now, just to be clear, just to give you a few tips and tricks on how to look at this price action on a delta footprint chart, we can see buyers coming up right here into this zone. We have an answer. We have small pack of buyers right here at this liquidity zone. So what can we actually understand? That there is a lot of passive selling happening at the top. Right here, these buyers get absorbed and we start selling off. Aggressive sellers coming in, and more aggressive sellers coming in, who get also absorbed at this zone. Voila. And we push price back up. So this is how a range gets formed. So here we have some aggressive buying again, answered by aggressive sellers at this zone. No unusual buying or selling activity at this zone, and volume also dries out. So we can expect and look for a reversal, which we get aggressive selling, aggressive selling, aggressive selling, more aggressive selling into this liquidity zone, more aggressive selling below this liquidity zone, even more aggressive selling. And now we have these aggressive buyers answering. We have here 14,576 orders and 362 orders. And this is where the reversal happens. This is where our passive sellers cannot win from the aggressive buyers. We go back up. We get a little retest. First, we get a little buyers coming back here. Get a little retest. Sellers are trying to step in. Right here, you see the selling delta at the low of this zone. And once we get at the top of this zone, the aggressive buyers start getting back in. Once more. And at the top of this zone, we get this aggressive buying right here. And this is our close on Friday. So next week, starting tomorrow on Monday, my best guess is that we will retest again, making our way higher through these liquidity zones, which will act like a magnet and where people will fill their orders. We can also start testing down, retesting the fair value gaps, and start going down back into this range and eventually get down. That's my prediction for next week. So these are my zones for next week. This is how liquidity zones work. So guys, if you feel like you got some good information about this, try putting liquidity zones on your chart and try keeping an eye on them. It will definitely help with your trading decisions, and it will definitely help with your technical analysis and your market structure analysis. Please like, subscribe, and leave me a comment, and I'll see you in the next video.